In a groundbreaking shift, the U.S. government has announced new regulations for the cryptocurrency market, causing Bitcoin to surge. This pivotal moment could redefine the crypto landscape and impact investors globally. Here's everything you need to know. Looking ahead, the implications of today's regulatory announcement could unfold in several ways. This announcement marks a pivotal moment in the ongoing evolution of cryptocurrency regulations. As governments and financial authorities grapple with the complexities of digital currencies, this new framework aims to provide clarity and stability. The cryptocurrency market has been characterized by uncertainty, leading to fluctuating prices and investor hesitance. First, we may see Bitcoin's price continue to rise as institutional investors enter the market, drawn by the promise of a more structured environment. Analysts predict that if Bitcoin surpasses $50,000 within the next month, it could trigger a wave of buying, similar to previous bullish trends following regulatory developments. However, there is a flip side. Unforeseen challenges in implementing these regulations could lead to market volatility, as has been seen in past instances of regulatory changes. Experts also suggest that we should watch for additional regulations targeting decentralized finance, an area that has gained significant traction and scrutiny. Lawmakers are keen to address potential risks in this rapidly growing sector, especially concerning consumer protection and market integrity. In the coming days, attention will turn to how exchanges adapt to these new rules and what measures are put in place to protect investors. The cryptocurrency market has faced scrutiny over transparency and security, making this adaptation crucial for long-term viability. One pressing question remains: will this regulatory clarity finally pave the way for Bitcoin to become a staple in mainstream finance, or will it face new challenges in this fast-evolving landscape? As these developments unfold, the balance between innovation and regulation will be critical. With upcoming legislative sessions and industry responses on the horizon, the next few weeks could prove transformative for Bitcoin and the broader digital asset ecosystem, potentially reshaping the future of finance itself. The path to this significant regulatory shift has been fraught with challenges and uncertainties. In recent years, the cryptocurrency market has experienced extreme volatility, prompting heightened regulatory scrutiny and persistent debates over security and fraud. The absence of clear guidelines contributed to a series of high-profile hacks and scams, which eroded public confidence in digital currencies and raised alarms among regulators. In 2024, the SEC launched investigations into major exchanges, which led to intensified calls from industry leaders for more defined regulations. Furthermore, the emergence of decentralized finance, DeFi protocols, introduced complexities that regulators struggled to address, as these platforms operate outside traditional financial systems and lack centralized oversight. Key players, including lawmakers and regulatory bodies, have been negotiating behind the scenes to establish a framework that balances innovation with consumer protection. Historically, previous administrations often overlooked or impeded the growth of the crypto sector, leading to a fragmented regulatory landscape that confused businesses and investors alike. Unlike past efforts, which frequently lacked bipartisan support, the current climate reflects a significant shift in American politics. Lawmakers from both parties now recognize the economic potential of cryptocurrency and the necessity for oversight to protect investors. The impact of these developments is profound. A comprehensive regulatory framework could restore public trust, encourage institutional investment, and foster innovation within the sector. With clearer guidelines, businesses will be better equipped to navigate the complexities of the crypto landscape, ultimately benefiting consumers and investors alike. As we look ahead, the collaborative efforts between regulators and industry stakeholders signal a new era for cryptocurrency, one where responsible growth can be achieved alongside robust consumer protections. The outcome of these negotiations is poised to set a global precedent for how digital currencies are managed, shaping the future of finance and investment strategies for years to come. The introduction of clear regulations in the cryptocurrency market marks a significant turning point for the industry. Recently, Bitcoin experienced a dramatic surge of over 15%, resulting in an impressive addition of approximately $12 billion to its market capitalization within mere hours. This surge is not just a fleeting moment, it represents a profound shift in investor sentiment and confidence. Millions of investors globally, many of whom had been hesitant to engage with cryptocurrencies due to regulatory ambiguity, are now presented with a clearer path forward. The new regulatory framework aims to establish a safe environment for trading, which is crucial for attracting institutional investors who have largely remained on the sidelines due to fears of potential regulatory crackdowns. The backdrop to this development includes years of uncertainty and volatility in the cryptocurrency market. Regulatory bodies across the globe have grappled with how to approach digital currencies, often leading to mixed signals that left investors anxious and uncertain about their investments. The anticipated clarity is expected to pave the way for broader adoption of cryptocurrencies in mainstream finance. This shift could fundamentally alter investment strategies, payment systems, and even banking practices as businesses and consumers begin to embrace digital currencies more readily. Enhanced regulations are also likely to prevent fraud and bolster consumer protection, essential elements for ensuring the long-term health and viability of the market. For the average person, this shift signifies a more stable investment environment with the potential for greater returns on investments. As clear guidelines emerge, individuals may feel more empowered to invest in digital assets, fostering a culture of innovation and financial inclusion. This regulatory clarity could spark interest from traditional financial institutions, which may begin to explore cryptocurrency offerings more seriously. Looking ahead, the implications of these regulations could redefine our understanding of money in the digital age. As cryptocurrencies gain legitimacy, we may witness an evolution in how transactions are conducted, savings are managed, and investments are diversified. The groundwork is being laid for a future where digital currencies are not only accepted but embraced across various sectors, potentially revolutionizing the financial landscape for generations to come. Ultimately, the establishment of these regulations may lead to a more integrated financial ecosystem that includes both traditional and digital currencies. On May 12, 2026, the U.S. government unveiled a series of clear and comprehensive regulations for the cryptocurrency market. This announcement was made at 10 a.m. Eastern Time, when Treasury Secretary Janet Yellen detailed the new framework during a press conference at the U.S. Treasury Department in Washington, D.C. The proposed regulations aim to provide clarity on taxation, trading, and compliance for cryptocurrencies like Bitcoin and Ethereum. This initiative reflects a growing recognition of the cryptocurrency sector's significant role in the economy and the need for oversight to protect investors. Historically, the crypto market has been characterized by volatility and uncertainty, with previous regulatory efforts often leading to confusion and fear among investors. In contrast, today's announcement marks a watershed moment, as it represents the first time the U.S. administration has laid out such extensive guidelines for the crypto sector. The immediate market reaction was significant, with Bitcoin's price skyrocketing by over 15% within hours, reaching $45,000 after trading below $39,000 just the day before. This surge illustrates the market's relief and optimism regarding the newfound legitimacy and security these regulations provide to investors. What makes this development particularly noteworthy is the bipartisan support it received, with both Democratic and Republican lawmakers expressing approval, a rarity in current U.S. politics. This consensus suggests a shared recognition of the economic potential of cryptocurrencies and the importance of creating a safe trading environment. By defining the rules of engagement for cryptocurrency trading, this announcement could stabilize the market and attract institutional investments that have previously been hesitant due to regulatory ambiguity. Looking ahead, the impact of these regulations could be profound. As institutional investors gain confidence in the regulatory framework, we may see an influx of capital into the cryptocurrency market. This could lead to increased innovation and growth within the sector, fostering a more mature and stable financial ecosystem. Furthermore, as other countries observe the U.S. approach, They may be encouraged to implement their own regulatory frameworks, potentially leading to a more unified global stance on cryptocurrency governance. The future of cryptocurrency could be shaped significantly by today's historic announcement. As we consider these developments, what do you think will happen to Bitcoin in the coming weeks? Will it stabilize as a mainstream asset or face new hurdles? Share your thoughts in the comments and subscribe for daily deep dives.